Okay. Welcome back, ladies and gentlemen, for another jam-packed daily cryptocurrency market. I am Allincrypto, and today we have a hell of a lot to talk about. We're going to be talking about things to start the video off from a bit of a macro perspective. So when we analyze the markets, we do it from a number of different points of view. We technically analyze the markets, most notably Bitcoin, but the broader markets as well, the stock market, gold, and what we define as risk generally, and the kind of anti-risk category. So we look at things technically, we look at things from a macro perspective, i.e. the kind of economic environment that we're now in. And yesterday you had Jerome Powell come out and deliver a speech, which was very telling, and it supports our thesis on the bond markets and what is ultimately going to happen with global liquidity, which supports our bull market in the cryptocurrency space. It's interesting that the sort of 4-year global liquidity cycle also matches up with a BTC 4-year cycle. I'm going to be showing you that in this video. We've got a lot to get into as always. We're going to be looking at the Bitcoin chart. We're going to be talking again about BlackRock and what they're doing with Securitize in regards to tokenizing a fund on Ethereum. This is a huge step in the right direction. And on the topic of Ethereum, you guys know that we do think an ETF is a given based on what we are technically being signaled on ETH BTC and also ETH dominance. This is part of what we do here. We analyze the market from a number of different perspectives to help you guys try and understand what's going on. And despite the volatile time that we've had in the cryptocurrency space, we've came on here every single day. We've even covered specific altcoins which have been significantly more volatile than Bitcoin and said, don't panic. Understand the trend that we're in. Understand the plan that we have in place that we share with you guys on a daily basis. And the rest is just noise. Don't get suckered into the red days and the negative news that comes with that. Just focus on the broader plan and task at hand. And if you are positioned rightly, you're going to do very well, in my opinion, in the next year plus. Crypto is going to be a massive beneficiary. And again, on the topic of Ethereum, we're going to be listening or taking a look at what Paul Grewal, who's the chief legal officer over at Coinbase, has to say on all of this. But let's start things off with what was very significant in regards to yesterday's event. So the Fed, where do I want to start this? Do I want to start this with Jerome Powell and what he had to say, or do I want to start this and lead into it with the global liquidity cycle? I think we're going to start with the global liquidity cycle. So when we talk about analyzing markets from a number of different perspectives, one of them is understanding the macro environment that essentially is going to enable markets to do well, most notably risk markets. So I'm talking about things like gold, I'm talking about things like stocks, and I'm talking about things like crypto, and even the bond market and housing, which we are actually bullish on. So we weren't in the buy bonds where diamonds ding dong camp, you know, these sort of macro LARPs or whatever you want to call them. We were in the, okay, don't buy bonds until there's a reason technically to buy them. And we see that now. We see interesting things in the TLT, which are the 20-year treasuries. And we are now bullish on that chart, and some of the few people to be bullish on it where we got bullish on it. And that's only going to do well if liquidity is available, okay? If the Fed is taking their foot off the gas. Yesterday, Jerome Powell gave a couple of really interesting things, like the fact that they were going to slow down their QT. They're not really getting rid of bonds. They're just letting them run out in terms of the dates that's on them. It won't be long before they step back in, and they have to step back in. They've already shown their willingness with Silicon Valley Bank. And this is the global, this is from Real Vision. Raoul, I'm not the biggest fan of him as a trader or even perhaps an investor, but I think he has an amazing platform. Always give credit where it's due. And I think he has some great guests on there. He also has some really good takes on the kind of macro, global macro, whatever they want to call it. And this is from Real Vision, and this is the GMI, which is the Global Liquidity Index in leading. It's a 12-month lead, and you can see where this has us going. This is the narrative that supports crypto and risk more broadly, and this is why when we look at Bitcoin and where we see it going, it's all very much supported by the macro context of things, and also Bitcoin against other markets. Other markets are bullish on the SPY. Remember Amazon, everyone was saying, get out, sell your Amazon, Jeff Bezos selling, and we said, nope, it's in a technical pattern to the upside. Don't listen to people that don't know what they're talking about. I don't know how many of you guys have read The Richest Man in Babylon, but it's a book that I highly recommend. The key to moving the financial needle in your life is to understand the game that you're playing, which is one where your wages get devalued and you need to own assets to hedge that. And that's kind of one of the core principles of The Richest Man in Babylon. But he also talks about not going to the wrong people for information or for investment. You know, I think the analogy was a shield maker. He went to go and buy gems instead of the gem dealer, and he, lost out on that. So this is the global liquidity index cycle. This is going to be the macro backdrop that's going to enable the bull market that we're now in. We were very early on calling that. And Jerome Powell actually came out yesterday and kind of confirmed a lot of this. He also confirmed our theory on the bond market. We've done a video called Who's Going to Buy the Debt? Very dramatic. But Jerome Powell, I think, kind of cemented all that. There was a number of things. So they kept rates where they were. We knew that was likely. I think June is the first 25 rate cut that we're looking at. That's going to drive the dollar down. That's all going to support it. So there's a lot that I'm kind of skimming over. I did do a update on Patreon. And the fee that you'll pay for the month is probably worth, in my opinion, yesterday's update alone. Because we don't just do this trust me bro attitude. We show you why we are doing what we're doing. I also share my portfolio in that one again with some updates. So the Fed chair is looking for confirmation of last year's low inflation readings. He's also talking about a better than expected market. So strong hiring wouldn't push Fed to delay rate cuts. He also talks about higher inflationary data hasn't changed its overall trending downwards trajectory and what it's been doing thus far. Powell needs a good reason not to cut rates. Market strategists, investors are relieved to see 3 cuts stay in the dot plot. No decision yet on the balance sheet reduction. He also spoke about slowing that down. Our policy rate is likely at its peak, so no high rates for longer. Remember, we fundamentally disagreed with people, even people I have massive respect for on this. So this is quite dovish as a whole, and this supports global liquidity, which needs to be supportive of what we're looking at for Bitcoin. Also, you had news that Switzerland have now started to lower rates. The Bank of England said that, you know, we're very happy with the inflationary print. It was lower than expected in the UK. We are moving back to a supportive environment, and it has to be supported. The Fed has to keep this Ponzi scheme afloat. And the beautiful thing in regards to what we look at is we technically knew all this, just like we knew that this was going to go high. We didn't know the news was going to be on the inflows that we've seen in regards to ETFs, but we knew there was going to be something, as there always is. And this is very much heading to our 151K target for Bitcoin, and I think it actually goes above and beyond that. So yesterday was a really good day. Again, I think people often think, oh, All-in, why are you talking about macro stuff? Because it's relevant, and it's a factor that's allowed us not only to look at Bitcoin at 15, 16K and say, right, it's go time, and we've had to ride volatility for alts, but there's not one cryptocurrency in my portfolio that's down. And some are up as high as 500%. Okay, you guys can do the exact same things. I believe in you. I know you can do it. Anybody can do it. If I can do it, anybody can do it. Everything, all the stars really are aligning in regards to the markets and where they're going. We are expecting Bitcoin dominance to roll, and alt season really hasn't even started yet. Now that should fill you with an uncanny amount of excitement. Certainly it fills me with it. We're really interested in lots of different sectors in the crypto space. Deep in, we've spoke about quite a bit on the channel. Data storage, I love. Computing, I think is going to be huge, and we've got some sort of like $20 million computing plays that we will be talking about. We're interviewing some of them actually at some point. We've interviewed a couple of them already, and we're just waiting to release those. Everything is aligning, and you can see, kind of going back to the Bitcoin chart, what Bitcoin did on the back end of this news. You can see, look at these wicks coming in. So you did fall out of a bit of a falling wedge. I think that target was pretty much made, and you've now found your feet, and this is the broader context of things. It's so important to have a channel like this where we can say to you every day what we're thinking and whether there's a need to panic or not. It's very common once you take a key level, we always expected this, that you consolidate around it. We can show you a million one examples of that. And it's very akin to what Bitcoin did over here. Is it not? So everything is very much in play. We kind of got a bit of a macro confirmation. Remember, we have this thesis on the TLT. I'm going to show TLT. People, I kind of lose people when I show all this stuff, but I do think it's very important to sort of understand the macro context. This is TLT, which is 20-year treasuries. The treasury is issuing about $1 trillion worth of debt. It's all for your benefit, by the way, guys. Don't forget that. The government is your friend. They're here to help you. They love you. They want you to do well, and they want us all to be equal. And what they mean by that is equally poor. You know, equality is something that you can strive for, but you need to put, I believe, sovereignty and liberty in front of equality. Otherwise, you'll end up with neither. If you go for equality, you end up with, not only do you not end up with equality, you don't end up with liberty and things like this. Whereas if you do it the other way around, you'll end up with the best kind of version of equality that you can give if you give people equal, you view them as sovereign individuals that have rights. You know, if you kind of infringe on people's rights in the name of equality, then you've failed on both fronts. But enough of my own personal political ramblings. This is the 20-year plus treasuries. This is the bonds. So we're bearish on yields, which means we're bearish on the dollar, which means it also supports risk. The volume that we saw here with a bullish divergence means this market's going to uptick, which is going to be perfectly in line with global liquidity, which is going to support our theory on Bitcoin and altcoins and where they're at. We did have news yesterday, which I thought was brilliant news. We were excited to announce that Coinbase has chosen a key infrastructure provider for BlackRock and securitized token investment fund. Big win for Ethereum. You know, BlackRock aren't stupid. They're very in there with the regulators, often enabled by them. They know what's coming, and this is Paul's take on the Ethereum ETF. Sai again with the ETH misinformation as we await a decision on ETH ETPs, exchange traded products. Okay, let's talk about some basic facts about Ethereum. Millions of Americans hold Ethereum. It has been vital to crypto since 2015's launch. I think it was 2014 actually, wasn't it? And ETH is a commodity, not a security. The SEC has taken this position for years. A senior SEC official have said that Ethereum is not a security. CEG, example, SEC Director of Corporate Finance Hinman statements. We know about ETHgate and all this stuff, very interesting. We could do a whole video on that actually if you would like it. Before he was SEC chair, Gary Gensler himself testified before Congress that ETH is not a security. So remember, he's got special interests that will be saying, oh, we don't want naughty retail to be making money. We want to get it first. We want to be in there first, which is why we champion charts, because we'll see these guys and girls that are pulling the strings, doing what they're doing. You won't get that from news flows because they own the media as well. Okay, it's all coordinated, and it's coordinated for your impoverishment. That's the game here. And this is what we try and arbitrage on this channel. So XC and even recently the SEC trials law continue to compare ETH to BTC. The CFTC and federal court have constantly confirmed that ETH is a commodity. ETH future contracts started trading on CFTC regulated futures exchange back in 2021. The Howey test doesn't determine Ethereum's status, and as we have explained in depth in other proceedings, digital assets like ETH that do not involve an ongoing contract obligation related to a business enterprise are not financial contracts or otherwise securities. Even if we were to apply the Howey test, ETH utterly fails the test, and nothing about the merge changes that conclusion. The SEC has no good reason to deny an Ethereum exchange-traded product applications, and we hope they won't try to invent one by questioning the long-established regulatory status of Ethereum, which the SEC has reportedly endorsed. That's not how the law works, and America deserves better. You do deserve better, my American brothers and sisters. Let's not give a long speech on that, okay? But you do deserve better. You deserve somebody that works for your benefit and not for your destruction and for a very select few people's benefits and not you guys as a whole. There are cases where the SEC have absolutely protected investors, but I'm afraid crypto is not one, in my opinion. We tell you every single day that crypto is risky and you could lose all your money. And we tell people not to bother leverage trading. Don't try and trade. That's the kind of way they think they're protecting you while stopping you from doing pretty much anything in the crypto space, whilst they're allowing others to do so, like BlackRock to tokenize funds on it. It's very ironic and interesting, but we are going to end up with an Ethereum ETF. I just want to fly by this very, very quickly, guys, before I love and leave you. So let's look at ETH BTC. We know the score on this. This is going to set up for a massive continuation. A big move's coming out of this. And also, one swallow does not a summer make. We have ETH dominance that's also confirming what we're looking at. So let the good times roll, ladies and gentlemen. Also, our others dominance that we've not looked at in a while. You know, the plan is still in play. And I think people are feeling a little bit better about crypto today. Now the volatility subsided, Bitcoin's doing well, altcoin's sort of regaining. There was no need to panic in the first place. And that's what I feel like my obligation is as somebody that makes content daily, is to give you my opinion as truthfully as possible and help people as someone who's experienced in this market and now with the broader markets, mitigate any kind of fear, uncertainty and doubt, and also FOMO when the time's right. And, you know, hopefully do well and move that financial needle in your life. That would make me unbelievably happy, and hopefully we do that. Guys, that's all I've got for you in this video. We've covered quite a bit. I'm going to love and leave you on that note. If you've enjoyed the content, a like is always greatly appreciated. So is a comment. And I look forward to seeing you all in this evening's video and, of course, in tomorrow's daily market update. Thanks a lot for watching. See you in the next one.